Hey, this is Warren Redlick. I want to do a quick video preparing you for the Lucid Motors Q3 earnings report that should come out tomorrow. Today is Monday, November 7th. This is 4:30 p.m. We're expecting their earnings release about 25 hours from now, Tuesday, 5:30 p.m. I just wanted to go into that a little bit. Here's some highlights from the Q2 earnings report. They delivered 679 vehicles that quarter. They produced 1,405 vehicles for the year, for the first half of the year. Now, note, this is Lucid playing games with numbers. Instead of reporting how many vehicles they produced in the second quarter, they reported how many they produced in the first half. Why they chose to do that, who knows? This is an example of Lucid playing games with numbers. Look for them to play more games with numbers in Q3. We'll see what happens there. Another thing to note is the number of employees is 5,600 plus. This number has been growing. This increases Lucid's cash burn. A lot of tech companies are now facing a problem. Startups and tech companies are facing a problem that they've got these high employee loads, high cash burn, and financial markets are getting difficult. Lucid's going to need to raise money soon. So are they going to do something about this number of employees? Is it going to grow? Is it going to shrink? Haven't heard anything about layoffs at Lucid, but they may be due to do layoffs soon. We'll see. Cash and cash equivalents and investments. This is Lucid playing games with numbers again. It used to be cash and cash equivalents. They threw in investments to make their number higher, 4.6 billion. We're going to cover that in a little more detail in a minute. And Capex, $310 million. So these are numbers we're going to watch for. We'll see if they give us the same numbers for Q3. One of the games they play is they highlight different numbers in different quarters. So these are the key statistics for Q2. What are the key statistics going to be for Q3? Are they going to be the same statistics? Most likely they're going to choose different statistics to report because they cherry pick the ones that make them look the best and they hide the ones that make them look the worst. Turning to financial highlights, we can see that they had 4.5 billion in cash equivalents and investments. Again, that tweaking number. Revenue was 97.3 million. Cost of revenue is 292.3 million. That means they basically spend 3 times as much money making a car as they make selling it. Not good. We'll see if that improves. I'm not optimistic about that. Cash used in operating activities. This is the cash burn. 513 million in cash used in operating activities. 310 million basically in Capex for a total of $823 million in cash burn in Q2. What's the cash burn going to be in Q3? And how quickly does the cash pile evaporate? That is the concern there. They offered some guidance going forward for the rest of the year. Production volume of 6,000 to 7,000 vehicles. This is way down from the original 20,000 they said they would deliver in 2022. Are they going to make this number? What are they going to have to show here? How many vehicles will they produce? How many vehicles will they deliver? We're going to see that in Q3. This claims sufficient liquidity well into 2023. What does well into mean? What does sufficient mean? Does this mean we don't go broke until February? Or does this mean by Q3 of 2023, we expect to still have $2 billion in cash? Well, we know that's not true. That's unlikely. So when do you run out of cash and what are you going to do about it? Are they going to answer that in the Q3 call? Will they say anything about that in the Q3 documents? We'll see. They're estimating Capex of approximately $2 billion in 2022. If we go back, we see that Capex in Q2 was only $300 million. So are they going to show a substantial increase in Capex for Q3? To get to 2 billion, you got to have a lot more Capex. To get to the point where you can produce vehicles in high volume, you got to have your Capex. You got to invest in your factories so you can produce in higher volume. So are they investing or not? If they don't invest, they can't get to higher volumes. If they do invest, they run out of cash quicker. They're in a dilemma. They also said deliveries of Air Touring and Air Pure later this year. It's November now. Have they started delivering Air Touring? I think they said they've started delivering Air Touring. They have 4 tiers of pricing on Lucid Air, not counting the new Sapphire. They had the Dream Edition, they had the Grand Touring, they have the Air Touring, which is the next one, which is still well over $100,000, and then Air Pure is like $80,000. They say they're going to deliver Air Pure later this year. The problem is that Air Pure is so low priced that it hurts their revenue model that they projected in the SPAC merger. If the bulk of their vehicles are Air Pures, they don't make enough money. Keep in mind how much they're spending to make the vehicles. If they're only getting $80,000 a vehicle and they're spending $500,000 to make each vehicle, they're losing a lot more money. So this is a challenge as well. Here's the breakdown. When they say cash and cash equivalents and investments of was 4.6 billion, it turns out that there's 3.157 billion in cash and cash equivalents and 1.136 billion in short-term investments. That doesn't add up to 4.6 billion to me. That adds up to like 4.3 billion. I don't know where the other 0.3 billion was or 300 million was. Who knows? This is Lucid playing fancy and fast with their numbers. This doesn't add up because remember they said 4.6 billion. They said 4.6 billion in cash, cash equivalents, and investments here. And then when you add up their numbers, you get 4.3 billion in cash, cash equivalents, and short-term investments. So where did the 300 million go? And we'll see what these numbers are, how these numbers are reported. Are they going to report them in the same format? Are they going to play with the format? Are they going to hide details? We'll see where that goes. Now you get into the operating operations numbers here, and the only thing I have here is the R&D was $200 million. The R&D for Q2 was $200 million. Are they increasing spending on R&D? What is their R&D money going to? We don't know. Is anybody going to ask that question? We'll see. But this, what's their R&D spending? That's gonna be a big issue. Are they spending a lot more on R&D? Do they need to spend a lot more on R&D to get their manufacturing in line? We'll see with that. Cash flows here, what you see is they had net cash used of $500 million roughly. Net cash used in investing activities, $1.7 billion. Net cash provided, $4 million. The net decrease in cash was $2.2 billion. They started with $5.4 billion and they went down to $3.2 billion. So their cash pile is shrinking fast. Okay? That is a pretty big drop in the cash pile. If that drop in the cash pile continues, at what point do they run out of cash? Now, they've said their Capex is going to be $2 billion for the year. They've got to spend like $1.5 billion or $1.2 billion or something like that in the second half of the year. Plus, they've got to lose money. They're losing money on operating activities. So, how quickly does that 3.2 billion in cash go down to 2 billion in cash? It probably goes down to less than 2 billion in cash by the end of the year. I don't think it goes down to less than 2 billion in cash by the end of the quarter, but we're going to see where does this number go. And just really quick, EBITDA, this is a common number that a lot of stock market analysts look at. What's their EBITDA for the third quarter? They lost 404 million in Q2. And here's their free cash flow, 513 million for net cash used in operating activities and 309 million used for Capex. This Capex number has to go up. It has to go up a lot for them to get to their 2 billion for the year. This has to, I don't know, 600 million, 800 million. We're going to see what happens with this number. Or are they going to dump all the Capex in Q4 to try to put off this beast as long as possible? Who knows? Or are they going to decide not to do 2 billion? Who knows? Free cash flow losing $823 million a quarter, not a good sign. The last thing I wanted to address is the Say Technologies questions from investors. What is the production target for 2023? We'll see if we get an answer from Lucid. What is their production target for 2023? I don't place much weight on Lucid's production target. What's their delivery target for 2023? I tend not to place much weight on their targets. Will they give us a target? We'll see. My gut hunch is they're not going to answer that question yet. They'll answer that question maybe in Q4, at a Q4 earnings call in January of next year. Maybe they'll give an answer. When are you planning to start building and utilizing the railway transportation in Casa Grande factory to reduce transportation costs for supplies and cars delivery? They're not doing enough volume for that to matter yet. I don't know. We'll see how they answer that one. These are good questions, maybe. Looks like there's about 1,000 cars that have been produced and not delivered. This is a question I raised in my video after the last earnings call. Why is that, and where are these cars stored? Are they going to say the cars were in transit? Were those cars delivered? What happened with that? If you follow Peter Rawlinson, my gut guess is he won't give a straight answer to this question. What is your current development progress of the current CarPlay version? I just don't think that's an important question. I don't know. That's trivial compared to their larger problem of making enough cars and selling enough cars and getting their cash in order. Report of Q3 deliveries and confirmation of 2022 delivery targets was helpful. Sure it was. Report of Q3 deliveries. Going forward, does Lucid plan to provide more transparency to investors between earnings calls? How about some transparency to investors between earnings calls and during earnings calls? Oh, that would be nice. Do you guys plan to make cheaper cars like Tesla in the future? Lucid has already said that they plan to make less expensive cars. The Air Pure is coming. That will be a less expensive car, less expensive than the current Model S. And then down the road, they have said that they have a future model that will be less expensive. First, they're going to do Project Gravity, which is probably more expensive. but they have indicated somewhere down the road they plan to make a less expensive car, probably competitive or trying to compete with Model 3 and Model Y. How many cars are currently being produced per day? This is a great question. I think per week would have been a better question than per day, because per day is kind of, fluctuates. But maybe they'll give an answer to this question. Last time this question was asked, they didn't answer it. Peter Rawlinson said it would be misleading to answer the question. Facts are misleading in the world of Peter Rawlinson. Are there currently any partnership deals in the works regarding OEM sale of Lucid technology to other auto software energy storage companies? No, no, there aren't. They'll talk like they're having conversations with, whoever. They'll like to fluff it up and pretend they've got something going on, but they don't. And I have a fairly reliable source who tells me they don't have much. There's not much special in Lucid's technology. This is someone I highly respect, spoke with recently. They don't have much of anything. Lucid's in trouble. This company's in trouble. I will do a full report on the Lucid's earnings call probably the next morning, but this just to give you a prep for this is what's coming on the Lucid earnings call Tuesday, 5:30 p.m. Just to give you some stuff to look out for. Please let me know what you think in the comments below. Check out the t-shirts at elonbits.com. Please support me on the Locals platform on Patreon or as a YouTube channel member. Check out my other videos. Please like this video, share it, subscribe to the channel, and thank you so much for watching.